Welcome back. I hope you had a nice day and have an even better weekend. Closing the week, the market was in the red for the most part, but ended up in the green. The S&P 500 closed the day being up 0.48%, while the Dow ended down 0.07%, and finally, the NASDAQ ended up an astounding 1.29%. Today, President Trump held his press conference regarding China's treatment towards Hong Kong. President Donald Trump announced he would begin taking steps to revoke Hong Kong's favored trade status with the United States. Trump said, quote, "My announcement today will affect the full range of agreements that we have with Hong Kong, from our extradition treaty to our export controls and technologies. We will take action to revoke Hong Kong's preferential treatment as a separate customs and travel territory from the rest of China." Trump also said he was ready to take action to mandate that Chinese and other foreign countries listed on U.S. financial exchanges abide by American accounting and auditing standards. Financial markets reacted positively to Trump's announcement, reflecting overall relief that Trump did not announce more drastic and punitive measures. During the same address, Trump also announced that the United States would be terminating its relationship with the World Health Organization, a move likely to draw criticism from public health experts and U.S. allies. The president said that the organization had failed to make, quote, "the requested and greatly needed reforms," and he blamed the Global Health Group for a lack of transparency. Looking at the sectors, it is apparent that financials had the worst day, being down nearly 1.3% as a whole on average. Healthcare, tech, and telecommunications all led the way up. Using our Morningstar data, we see that Small Cap Value continues its losing streak after starting the week off hot. Mid-cap growth led the way up, as it did yesterday, and growth as a whole performed well today. The biggest move upwards in the market came from NortonLifeLock, which is a cybersecurity company. Today, Norton moved up 8.79% after they filed their annual report yesterday. They reported earnings earlier in the month, beating on both EPS and revenue estimates. They beat EPS estimates by 10 cents and revenue by $12.68 million. They recorded an EPS of 26 cents and revenue of $614 million. This was a slight decrease in revenue by 0.5% year over year. The second largest mover was pharma company Regeneron Pharmaceuticals. They had a positive gain of nearly 6% as they and partner Sanofi announced that their Semipilab showed benefits with basal cell carcinoma, which is the most common type of skin cancer. The largest loser was DXC Technology, which provides business-to-business information technology services. DXC moved down an astounding 14.24% after they reported earnings yesterday. DXC beat EPS estimates by 24 cents with $1.20 per share. However, they missed revenue estimates by $40 million, coming in with $4.82 billion, and being a decrease in revenue of 8.7% year over year. On top of this, they announced that they would be suspending their quarterly dividend, causing JP Morgan to downgrade the stock. All of this caused major problems for the stock today. The second largest loser was familiar beauty company Coty Inc. Today, their shares were down 13.37% after a report stated that the Jenners may have shown Forbes and WWD false financials when interviewed years ago, and that, after digging through Coty's financials, found that Kylie's business was, quote, significantly smaller than what the family had been claiming. The business, based on financials for 2018, must have quietly fell by more than half in a single year, the report added. Coty in turn paid for a high-growth company that was in decline. Getting into earnings, we start with popular cannabis company Canopy Growth, ticker symbol CGC. CGC reported a loss of $3.72 of Canadian dollars. They missed on revenue by 21.66 million Canadian, coming in with 107.91 million Canadian. This did represent growth of 14.7% year over year. Investors did not enjoy this news and sent shares down an astounding 20% as they booked profits from the recent rally. Popular retailer Big Lots, ticker symbol BIG, reported a double beat during earnings today. They beat earnings estimates by 86 cents, coming in with non-GAAP EPS of $1.26. Revenue beat by $120 million, coming in at $1.44 billion and represented growth of 10.8% year over year. Investors took this news greatly and sent the shares up 5.64% today. Big Lots rally is something marvelous, as it is currently up nearly 264% since March lows. That is all that I have for today. Thank you for your time. I hope you learned something today. As always, I wish you a nice weekend. I'll see you again on Monday.